This is Adam Smith, the health insurance advisor, and today we're going to go over how a deductible works. And if you want to see best health insurance for self-employed, make sure to check my other video. So with the deductible, there are a couple things to know. The deductible is the amount of money you pay out of pocket before your insurance kicks in. And every plan that offers guaranteed coverage is going to have three numbers. So you're going to have a deductible. Again, that's what you pay out of pocket before the insurance kicks in. You're going to be at co-insurance after that, which is a split between you and the insurance company. And then once you hit that, you're at co-insurance until you hit an out-of-pocket max. So again, you want to understand those three numbers on every plan that you have. And that's another reason to look at the health coverage summary. So the health coverage summary is where you see all the benefits to the plan. And then on top of that, you also have the networks. So a network is all the doctors and hospitals that are contracted in that pool, and if you use their services, you get all their services at a lower rate. So you want to stay in the network when you can. And networks could be EPO, HMO, or PPO. And PPO networks give the most freedom because you can actually go to the doctor you want and you don't have to waste time getting referrals. You can see my video about EPOs, HMOs, and PPOs right over there. And then another thing is co-insurance. So this often confuses a lot of people. Co-insurance is actually what you pay out of pocket to access your coverage. So most of the time when you go to the doctor's office, they ask you to pay a copay, which actually doesn't have anything to do with your deductible. That's just like a $20, $30, $40 fee you pay to access your coverage. But again, for most plans, a deductible is what you're going to pay out of pocket aside from one wellness visit a year to access coverage. So all your sickness and all your accident claims are going to be paid out of your pocket until you hit that deductible. And that resets for every individual on your plan every year. So you really want to make sure you have a reasonable deductible that you could pay for a major year. So make sure you have that in the savings. So the worst case scenario, again, you can pay that deductible, co-insurance, and out-of-pocket max without having to go and file for bankruptcy. So that copay, you pay that to access your coverage, and then once you pay that, again, you're at the deductible, and then you're at co-insurance. So co-insurance, again, is a split between you and the insurance company. It could be 60-40, 70-30, 80-20. Some plans have 100% co-insurance. And then again, you really want to know what your split's going to be up to your out-of-pocket max. Your out-of-pocket max could be $3,000, $4,000, $6,000, $9,000, depending on your plan. So just make sure you ask questions. Take a look at your health coverage plan summary. Make sure you understand, again, those three numbers: a deductible, co-insurance, and max out-of-pocket. Because if you don't understand those numbers, likely you're going to be paying thousands and thousands out of pocket. This is Adam Smith, the nationally licensed health insurance advisor.